Hey, welcome to all of our guests, and I know some more are going to keep joining us. I'm Sean Brown. I am the CEO of YCharts. A real quick logistical item. We would love to keep this interactive, and in order to do so, please feel free to submit any questions to us in the Q&A box. We'll monitor that, and to the degree we can get to it as we're going along, we will. Otherwise, we will save that until the end. We did allocate some time for that. The other thing I want to make clear to everybody is for everybody who registered, we will be sending out a copy of the slides that we go over. We have about a dozen slides that we're going to use to facilitate our discussion, and those will be made available to you. But I would love to get going here and just say I am absolutely thrilled to be joined by my friend and somebody I look up to a ton, Tyrone Ross. And our objective today is how should we be thinking about crypto assets? A bit of a 101 course starting out on some definitional things, all the way down to how should advisors be considering their options and how should they be thinking about crypto when inevitably their customers are asking. But before we get into it, Tyrone, can you tell everybody a little bit about yourself and your new venture?
So I am the son of superhero parents, Carol and Tyrone Ross. Won't waste your time with that slide. But what is very important here is that everyone understand that my goal today is to obviously educate you all. We're going to talk for advisors, by advisors, bring it right to you. Onramp, obviously what I'm doing now, a lot of folks know, is to help three things. EAT is what we're calling it. Educate advisors, provide them access, and give them the tools, right? Like what you're doing, right? Providing tools for advisors to seamlessly run their practice around crypto assets the same way that they would Apple. There should be no difference between you engaging with crypto assets or ETFs, mutual funds, bonds, stocks, whatever. So that's what Onramp is looking to do. Bring it to you Amazon style, right to your doorstep, so you know what's in the box. You don't have to go out to the post office or the post office box and be surprised.
Tyrone, what got you personally interested in and fully invested, fully in on crypto?
The year was 2015. And I had a friend of mine who was the one who made all the fake IDs, right? And then myself, but he would make our fake IDs, and he was a Ruby developer, and he was really into computers and all this stuff. And I was at Merrill Lynch at the time, and he kept bothering me about Bitcoin this and Bitcoin that is going to change the world. And I'm like, right? You live two lives in crypto. One where you go, man, that's incredibly stupid. And then the second one where you go, man, I was stupid for not listening the first time they told me. So a little bit later than that, late 2015 is when I got in full time, because he said, hey, do me a favor, download this app. I'm going to send you some. And he sent it to me. And I was like, wait a minute. Like, I just got that right away. And he literally said this to me. I tell people all the time, it's like, the magic trick isn't done. You send it to somebody else, right? And then you're gonna watch it leave, and it's gonna show up over there. And I was just like, all right, I'm all in. And he put me in this Facebook group chat. Again, to this day, some of the smartest people you will ever want to. Oh my God, the stuff that they were talking about. I understand it now. I didn't then, but I'm looking and I'm like, man, they are giving each other some horrible investment advice. I'm like, this is really bad. And I remember going to my mentor at the time at Merrill, and he was like, don't mess with this. Like, I've seen it with discount brokers. I've seen it with robo advisors. He's like, just don't, and I'm like, no, I really think this is the thing. And he was like, well, if you're going to do it, you can't do it at Merrill. So I think a lot of folks here will appreciate this. So the fall of 2016, Howard Lindzen says that he is coming to New York City. And I'm watching college football, and I tweet him. And I said, you got 15 minutes for me? And he goes, yeah. And we sit for an hour and a half. I can't shut up about crypto and startups. And he goes, I'm going to give you a bit of advice. Young man, when you leave here, go leave Merrill, go all in on crypto and startups, and you will have an insurmountable lead. And which is why I always give Howard Lindzen his flowers. He never takes them. But if it wasn't for him, I'm not here. He changed my life with that advice. And I kind of went all in after that, and the rest is history. I hope.
Oh, that's awesome. And now you are all in, and let's start talking a little bit more about crypto. I remember my first time going into Starbucks. I I was so baffled. I'm hearing grande and venti and mochaccino and all kinds of stuff, and I didn't even know the language. And I remember that first moment was a little nervous, like, geez, if I just knew the words, I might be able to order a simple cup of coffee black. In a lot of ways, crypto feels like that right now. So I'm hoping we can spend just a few minutes definitionally talking about a blockchain, talking about crypto assets, and talking about cryptocurrency. I guess my question for you, Tyrone, is I understand blockchain to be the technology underpinnings for a decentralized ledger that can do all kinds of things. And it is a technology underpinning for crypto assets and cryptocurrency. Is there anything I'm missing about what blockchain is?
No, I think for everyone watching this, take a pic. Well, you're getting it. Save this slide. This is very important because I think understanding crypto assets versus cryptocurrency is very important. The blockchain part I'll get to. The reason you get into the conversations of no intrinsic value, it's a bad, use of money and so on and so. Yeah, if you're talking about a cryptocurrency, crypto assets, right? There's a bunch of things that fall under that. Cryptocurrencies are one. Crypto dollars is another. Utility tokens, security tokens, all of these different things. So it's great that you understand that because now you can start to decouple the space and put them in these buckets that you have here. This is wonderful that you've done this. Yes, there are cryptocurrencies that are actually currencies and used as money. By the way, Bitcoin could be used as such. Depends on where your feet are. That's a whole separate webinar. And I'll kind of get to that. Crypto assets, again, is everything that I said, the full scope of everything that includes crypto. Here's the thing about blockchain. It's very important for folks to understand. It's sad that in 2021, you still have the folks that are on blockchain, but not crypto or not Bitcoin. Well, you can't have one without the other. Right? So you have blockchain, which is a term, by the way, that it came to be monetized and used and marketed in right around 2014. Blockchain isn't mentioned in the white paper, right? Proof of work chain is. So blockchain became this thing that corporate America said, hey, let's go with that. And startup founders said, woo, we put blockchain in this pitch deck, man, we're going to raise a lot of money, right? Now there are tenants and constructs of how a blockchain comes together, which is really fascinating, which is why understanding how the Bitcoin blockchain works, which is also why I always keep this book handy, Cryptoassets, because you start to understand everything that comes after the Bitcoin blockchain is a derivative of it, right? Litecoin being the second oldest coin. Then you have Ethereum that says, hey, we can kind of make this better and right? So once you understand the basic underpinnings, you start to understand the whole space in its entirety. But also, I think it's good when you really understand, and we wrote a piece about this, is that blockchain was a marketing term, 2014. You can go back and look, and then go back to the white paper. Proof of work chain is probably a better way to describe that. So what you have here is really good for advisors and everyone to understand that as you start to understand the crypto asset space, there's certain cryptocurrencies you should pay attention to, right? Stable coins, again, crypto dollars is a better name. And then even understanding blockchain. I'll put the bow tie on that here. One of the things that advisors do not get, and a lot of people don't understand, is just like you said, the language, the nuance, the verbiage is just very weird. And understanding Bitcoin big B, blockchain, Bitcoin little b, the actual token, Ethereum, the blockchain, Ether, the token, right? All of these things, just the basic nuance, because it is a new language. Similar to when we throw around ETFs and basis points, and like the average person doesn't understand that. So I think if financial advisors sit back and you walk into any party and you talk about basis points in the Fed and SPACs, most people look at you nuts, right? So it's the same thing when they hear us crypto hippies talk about all of the things that we talk about. They go, what are you talking about? But this is a fantastic slide. I think everyone should save this and use it because it's very valuable.
Yep.
Awesome.
So in summary, blockchain's the technology, guys. Crypto assets is the superset. Underneath the superset is cryptocurrency. And let's dive into it a little bit more. So first, why are we talking about this? Look at the gains that you've seen year to date: Bitcoin, Ethereum, XRP, Cardano. Tyrone, question for you: is it Dogecoin or Dogecoin?
It's Dogecoin.
Dogecoin.
It's Dogecoin.
Dogecoin.
Yes.
Talk to us a little bit about, everybody is very understanding of charts and upward to the right trending lines. These trends are incredibly impressive. Give us some context for what is behind all of the excitement, enthusiasm, and the huge price movement on the various crypto assets.
Over exuberance. A lot of, again, money made available to people to trade and think that all of a sudden they're, Carl Icahn. Lack of understanding and ease of access. That's the truth. And that's what you see here, because those numbers, based on, if you look at the investable, right, coins, there are few, very few in my opinion. And when you look at the gains that you've seen year to date and over the last year or so, and again, let's make this very clear. Bitcoin is only 12 years old. At this point, it is still a speculative asset. I'm as big a Bitcoin maxi as they come. Bitcoin is not digital gold. It's not a store of value yet, right? Will it get there? Yeah, I think so. But it's still a speculative asset class. And guess what? That's okay, right?
Mm-hmm.
Like, same thing with Ether and Ethereum. Fairly speculative, right? The markets are still maturing. It's still very early here. So I think what you've seen in 2017, similar to now, is just this hopium. I can get rich quick. Like, I was listening to a podcast yesterday, and they're talking about all these crypto traders who buy in G-Wagons. That's a problem, right? And that's just very frothy. So you have a bunch of, what I'm calling COVID advisors. All of a sudden, everyone knows everything about trading and the scams are up. That's what you're seeing here. Now, with that said, what I do see is the difference between the price appreciation in Ethereum and Bitcoin. Now, if I'm talking about the Bitcoin and Ethereum blockchains, no. That should be reversed. If we're talking about the actual price, right, of Ether and Bitcoin, the actual token, this kind of makes some sense based on the utility that folks are finding with Ether, right? You just had Carl Icahn, right, talking about Ethereum. We are in bizarro world, right? And I was just saying this morning to a very big DeFi gen, right? They call them DeFi gens, big Ether. And he agreed with me. I said, you know what's funny? I know the Bitcoin folks will hate me, but it's just easier for the advisory community to understand Ethereum, right? And I love Bitcoin, right? Love Ethereum too, but it's just easier to understand. So I think to go back to sum it up, what you're seeing here is just over exuberance. Everyone is a perfect trader. It's up and to the right. I can't miss.
Yeah.
But if you dig deeper, I think there's more nuance there as you start to understand the space.
Yeah. Price movement's one thing. Let's take a quick look at the market caps. For any of you guys that are paying attention to Google, Amazon, Apple, Microsoft, you know that their market caps are between $1 and $2.5 trillion. So the all-time high for Bitcoin is right up there in that range. If you look at the trading volume in April for BTC was $1.84 trillion. Now, if you compare that to Apple's 250 billion, that's a 7x. There's a lot going on in this space. And so Tyrone gave us a little context to, why the exuberance and the factors. What is absolutely inarguable is that the interest, the excitement, and the volume and market caps associated with it say that it's here and it's real. And anybody hoping that it disappears soon is probably has a lot of hoping that they're going to do, but just absolutely enormous magnitude.
Mm-hmm. Absolutely. And again, I think this is another good place to stop really quickly is market cap. I was saying this, it's probably a flawed metric when you start to look at the crypto space, realized cap or free float market cap. Like, there are better metrics to understand, again, and begin to value. There it is, value methodologies that the SEC said they want IAs to understand. it's not as simple as just, oh, okay, what's outstanding versus the price. It's not that, right? Realized cap looks at, the coins that have moved on chain last, right? And it takes, a lot of other things into consideration. Free float market cap, same thing, right? There's really different ways to value these. Market cap isn't the best metric here, but again, this is part of the learning process, and we'll learn and get to that. But I'm glad that you put that up. Great point.
So let's start diving into a few things. There are a few trusts available that would allow you to invest in Bitcoin or allow you to invest in Ethereum. And some quick statistics are up here about 1-year performance and things like that. So the downside of a trust is a trust is a closed-end fund. It may not be as liquid or trading on the big exchanges, and it's trading often at a premium or a discount to net asset value. So one of the ways that people are investing in, especially Ethereum or Bitcoin, is through these trusts. Tyrone, one of the questions we got in advance of getting on here is, why a trust? Why aren't we seeing ETFs that are helping people invest in Ethereum or Ether or Bitcoin? What's the answer to that?
So shout out to Grayscale. Grayscale fulfilled a need. They saw the demand, and it was a lot easier to get the trust structure set up than get an ETF approved, and they printed money, right? So good for them. No, it's not the best structure in my opinion, but my opinion doesn't matter. They've done well. Look at the AUM there. That's impressive, right? So, it is, they saw a need and they filled the demand. I think an ETF, again, I've gone on record saying I'm not a big fan of an ETF either. An ETF isn't no better than this in my opinion, but shout out to my Wisdom Tree family. They have an application in. I hope they do get it, but this is just part of the space maturing. I think there should be ETFs, and I think there also should be the ability to get direct access, to actually hold the underlying and understand what that means to be a part of the crypto economy. So trusts are going to have its place, ETFs will have its place, so will direct access. Do I feel one is better than the other? Absolutely. Do I think one is more compliant than the other? For sure, right? But I think this is and again, the performance have been great. They filled the need. The trust structure was easy to get done, and they put it in the market and people ate it up. So kudos to them.
Yep. So we did have a question come in, Tyrone. Maybe you can tackle now, which is, why is Ethereum easier to understand than Bitcoin?
I think it's easier to understand and again, I don't know if that's real. I think for advisors it is, for this reason, simply because of the utility, right? Everyone says, okay, what a utility. It's very easy to say, okay, I can use Ethereum as part of the Ethereum blockchain to pay for gas fees and things like that. And then you look at NFTs and what's going on at DeFi. I think it's just easier to kind of connect the dots for financial advisors and go, oh, okay, this is how they get that yield. Whether they actually believe the yield or not or trust it is another story, where it's just like, okay, Bitcoin just sits there, right? And that's kind of the perception to financial advisors. So I think that's why it's just easier to understand. It's easy, like Ethereum's like the Legos of money almost, right? So it's a very simple thing to see how you add one to the other and you just get, oh, here's how we get yield, or here's how we pay for this, or here's how we use it for that.
For those of you, we won't go into the depths on this session, but for those of you interested, great podcasts out there that'll explain to you the difference between Bitcoin and Ethereum, and the fact that Bitcoin is much less programmable friendly, much more challenging to fit into an overall set of applications or set of things you might want to do as crypto assets. Ethereum was built in mind to be very program friendly, and there are several components to that we could spend 2 hours on now, but won't. So let's talk about advisors and advisors having the discussion about crypto with their clients, because that's ultimately what we've gotten on this call about. Statistic on the left: 81% of financial advisors have reported receiving questions from clients on crypto in 2020. So the questions are only popping up more and more. Very interesting. We'll hit on that soon. Most crypto investments are held away from their advisors, and that's a big reason Tyrone's doing what he's doing. But a few questions on this. Tyrone, I think we talked about what is a cryptocurrency, but the back end part of Desarte's question was, are they safe?
100%. The most secure, one of the most secure things in the world is the Bitcoin blockchain. Absolutely. Desarte knows this. I tell him all the time.
Okay. Desarte, you already know the answer. So Taylor Schulte said, do cryptos belong in a diversified portfolio of stocks and bonds? If so, what percent allocation?
Also had this conversation with Taylor about the allocation. And he was like, why do you do a 1% allocation if you really have conviction? And I agree with him. So do it belong in a diversified portfolio of stocks and bonds? In my opinion, no. Right. And I know people are like, but no, I don't think so. But I think if you are well-versed and educated and you want to add that alongside of a portfolio, right? It's more of a venture type investment. Again, right, you have what my co-founder calls, right, return enhancers, risk reducers, right? It's a return enhancer, but it necessarily, doesn't reduce risk for the most part in terms of the traditional ways that an advisor would quantify that. So the truth is this: most advisors really shouldn't be looking to add it as a part of a portfolio. They should be looking to spend a lot of time learning about all of the nuance in the space. And then at that point, if you feel like it should be a part of a client's portfolio, yeah, sure, why not?
Got it. So this is the big question. We showed several different cryptos, and they're more every week. In your opinion, which crypto assets will be here for the long run, Tyrone?
Bitcoin will be here for the long run. Ether will be here for the long run. Outside of that, I think it starts to, you start to reach a little bit. I think Elon is single-handedly going to keep Dogecoin alive. But there are some other ones out there that, again, that I think are, you're going way down the rabbit hole at that point. I know folks are interested in Cardano. And there's some others out there, but I think the ones that me personally, that I would say I know that are going to be around when you look at the network, when you look at the amount of developers working on them and so on and so forth. I think Bitcoin and ETH, it kind of stops there. Again, I think there is some hope with some other stuff, but when you get into, Decred and Polygon and some of these other things that are out there, it gets really, really fascinating. But we're early. We're very early. More will die.
Is it safe to say, you pointed to Bitcoin and Ethereum, is it safe to say, in your opinion, there seem to be sound business constructs around those at this point in time, and a lot of the other ones, at least at this point in time, look like very speculative assets without maybe a business model behind them?
Yeah, and again, I think if coins versus tokens, right? If you look at actual coins, I think that is something where they're all speculative. The Bitcoin blockchain is revolution. I've been saying this all the time. The only inarguable use case the Bitcoin blockchain has is that it's been a salve to the underserved in this country and all over the world. No one can argue it. And again, I'll talk to anybody about that. I've been raised in a home with no bank account and had to operate outside. What Bitcoin has done, it is the gravity of social justice, the blockchain, not the coin. I don't care about the price of Bitcoin, but man, every day that the Bitcoin blockchain lives, more people all over the world, and especially in the great United States of America, get access to banking and investing and being able to, to actually transact and transfer value. That is incredibly powerful. And yes, it's worth any energy usage that it is taken up, which is, there's a lot of nuance there as well. And that is absolutely why it should be in every ESG mutual fund or ETF, bar none.
So there was a question in the chat before we get to this next slide. How should advisors think about valuation when they're considering investments? Are there, you know, in the world of stocks, there's the capital asset pricing model, there's efficient frontier, there's price to sales ratios, price to equity, there's earnings calls and analyst estimates. There's a whole lot of factors that can go into somebody saying, I think this is appropriately valued today, or it's undervalued or it's overvalued. How should advisors think about the value associated with the crypto that their clients are thinking about?
Take everything that you just said and take it out. We just wrote, and it's a shameless plug here, but we just wrote a piece on crypto asset valuation. Shout out to my Onramp family. And this was one of the things, and we're sending it to the SEC. I told Hester Pierce that we would write this because, again, this is one of the things that they talk about in the risk alert that they put out on February 27th. Encourage all the financial advisors out there to go look at that. Valuation methodologies is one of the things that they talk about in terms of your pricing structure and fees and how are you valuing these things. One of the things that you cannot do is use any of those old metrics. It just doesn't fit. There are observable metrics, what I'm calling them, that advisors can look at, that they can actually on-chain data, which I know you all provide, right? DAA, daily active addresses, network transaction value, all of these different metrics that advisors don't even know that are out there. You can start to build a construct of fundamentally valuing the network, right? And the people that are using it, right? There's a stat that NYDIG, right, just did a study. For every million users the Bitcoin gets, the Bitcoin blockchain gets, the price moves, little b Bitcoin, price moves $200, right? So again, there's just these constructs that really smart people have started to put together to determine, okay, well, how do we actually value these things, right? There's a lot of metrics out there that I would encourage financial advisors to look up. And again, those observable ones that an advisor can actually go and look and search and then say, oh, okay, right, Metcalfe's law ratio, all of those things, I think it's very easy to say, okay, well, here's how I could begin to place a value here. But all of those, discounting cash flows and capital asset pricing models and PEs, that just doesn't fit in this world. I know it's tough for some folks to get across, but that's just where we're at. It's a whole new language and understanding of how to actually create, some valuation frameworks here. None of those old models work.
Got it. So we've talked a little bit about the definitions associated with blockchain and crypto assets and cryptocurrency. We saw some charts showing us the performance. We got your opinion on what's here to stay versus what's a little suspect right now. We just heard about how to think about fundamentals. Let's turn our focus right now to saying an advisor and their client and how do they proceed together. A couple interesting statistics starting in the upper right. 22% of advisory clients own Bitcoin. I thought that was a really large number. Only 3.5% or like 15-ish percent of the total who own do that through their advisor. So that is an enormous percentage of advised individuals who are not making this investment with their advisor. They are making this investment as a held away asset. Lower left, 76% of advisors think that their clients are or may be investing in crypto on their own. So it's almost like this little secret stash. I'm doing some stuff over here. This is my side investment hustle, which is also interesting. And then, lower right, what are the recommended approaches to the people that we surveyed for adding crypto exposure? There was everything from owning a coin outright at 54% to I don't know at 7.7%. I guess, Tyrone, my question for you is a pretty simple one, which is how any of these statistics that you don't agree with, or any context you can share about the fact that a whole lot of advised individuals' money is going towards crypto, but it's not going through the advisor. In many cases, the advisor wouldn't know how to proceed to custody that asset.
Yeah, I think a great survey would be how many advisors own crypto, but you can't buy it for your clients. That'll be a really good question. And a lot of advisors have front run their clients here. Now, I think that 22% of advisory clients on Bitcoin, that's very low to me. I think it's way more, right? And I just had this conversation, and it was a debate. Shout to Josh Brown, who I love, but we had a debate, and I told him, he's like, oh, we're not seeing demand from clients. I'm like, yeah, you're not seeing demand because you haven't told your clients that you have any interest in this and doing it in your firm. Clients are doing it away from advisors for sure. So that 76% are exactly right. Your clients are doing it away from you. They're having a beautiful, elegant experience. And when you try to pull them into using your, legacy infrastructure tools, they're not going to be so happy. I've lived that, right? So I think one of the things that we've seen in conversations that I had, a couple of things. One, this is the first time in a long time, probably ever, for folks that have been in the industry a long time, said it, where clients are coming to their advisors already knowing more than the advisor does, right? So they are looking for the advisor to say, all right, let's talk about it, right? I'll just listen instead of saying, oh, it's tulips, sell it, right? A lot of folks aren't coming to their advisors because the advisors aren't just simply telling the clients, listen, I'm conversant. Let me just hear what you have away from me. Let's talk about it, which all advisors should be doing, by the way. If you are conversant, you're listening, you're learning, you're leading your clients, that's what you should be doing. It's not about necessarily putting your clients into Bitcoin. They're not going to fire you for that. They're going to fire you because you don't have an opinion. And I've said this, I'm going to be overjoyed when an advisor who hates crypto uses the tools that Onramp provide to show a client, say, hey, you see these 80% drawdowns? Do you see how volatile this is? We're not touching it. And they use the tools that we provided to be able to do that. So nothing here is shocking to me. I think we see demand for education. We see demand that, hey, clients are telling me they're doing it away from me. I can't see it. I can't do anything, right? It's just a way. I don't know where it is, how much, what are they doing? And then the third thing is, advisors want an ETF for a lot of reasons. One, because the accessibility into retirement accounts. Two, it's just very easy to buy, sell like a stock or a security, custody, safekeeping, private keys, all that stuff is taken away. And I think the most important thing is, if I know anything about my peers, they like to get paid, and advisors want to get paid. And here's the truth: if you are taking a risk, career risk, on speaking or allocating to a client about something that is only 12 years old, yeah, I should get paid for that, right? Mm-hmm. And I think they should, right? So those things, you add all those together, and advisors are in a very weird spot of, what do I do? And again, it only has no intrinsic value, and it's a bubble, and it's all those other things until your clients want it. And that client that you work so hard to get is making your book of business goes, I want it. And then you go, well, okay, let me find a way to buy some tulip bulbs.
Well, let's talk about some available options, because I'm not sure everybody is even aware of what the available options are. On the left is what the client can do on their own and probably is doing on their own. And on the right is what the advisor can do on behalf of their client. Tyrone, do you want to give us a quick rundown of the options available?
Yeah, so man, there are so many. So let's just go with, I think we should start with client control. And there's so many different things out there. Again, we just put out a piece on, we teased it, but it's in Onramp Academy, of the exchanges, the brokers, and the custodians, right? By the way, Coinbase is all of those, whether you like that or not, but Coinbase is an exchange, a custodian, a broker, they're all of it. So there are so many options that clients have away from the advisors: Swan Bitcoin, Abra, Robinhood, Cash App, Coinbase, Gemini, River Financial, Casa, Unchained. I could go on and on and on. There are so many things and options that clients have away from the advisors to be able to access this. As far as advisor control, there are a lot of options out there now. Obviously, we threw our hat in the ring to show advisors held away crypto and, direct access to Gemini, which is, a qualified custodian, based on, again, what the SEC is given that clearance on that. But there are so many different, folks out there that are also, blockchain comes up a lot. Eaglebrook is brought up a lot. Grayscale is brought up. Kingdom Trust, Alto RIA. There are a lot of options out there if advisors want them. Again, it's just the education of what they feel is best for their practice. We're doing model portfolios with Wisdom Tree. So an advisor will have a model portfolio that'll have a sleeve of Bitcoin and or a sleeve of Bitcoin and Ethereum. That we're working on with Wisdom Tree. We're having some really cool conversations with some other folks as well for model portfolios, because again, advisors love model portfolios. So there's a lot of options for advisors, just a matter of fees, transparency, ease of accessibility. And that's what we wanted to do, right? I said this, as easy as opening a box of saltines, right? To be able to open an account, get secure custody insurance, cold storage, all of that stuff.
Yeah. And I think it's neat, this stuff you guys are doing at Onramp to, with Gemini to make this very, very doable. The lower right, for people that are interested in just investing in the picks and axes associated with the whole crypto world, there are companies out there, like NVIDIA, like Coinbase itself, who are providing an infrastructure to make the entire process easier. But as you can see, upper left, again, that's Ledger, Coinbase, and then I think the other logos here, Tyrone's up top with Gemini, Grayscale, and then NVIDIA. A lot of different options available.
Yeah, Microsoft is a big one. What Microsoft is doing with decentralized ID on the Bitcoin blockchain is nothing short of astounding. I don't know how it doesn't get more headlines.
Yeah. So on this slide, I'm just going to animate a little bit the common concerns that we hear. I don't think any of these would be a surprise. And I think you touched on, there's volatility. What are the fundamentals? Regulatory environment. That's why we don't yet have ETFs, et cetera. Be fearful when others are greedy. Be greedy when others are fearful. I've been burned before. This is no different to somebody saying that this feels like a meme stock. Any concerns not listed here, Tyrone? I know you're dealing with this on a daily basis. Any other concerns before we kind of move on to some more specific questions?
E&O insurance. It's a big one. Huge, right? If you say you're updating your ADV, right? We put out a Bitcoin compliance guide, but updating your ADV and E&O. If you go to, increase your E&O or just try and do an E&O insurance provider, well, if you touch crypto, bye. That's a big one, not addressed. We have so many advisors asking us about E&O, big one. Also, come on, Doug. I talk to Doug about this all the time. Shout out to my man. For all of the advisors watching this, you have all of the regulatory clarity that you could ever want from the SEC, FINRA, CFTC. Now, it'd be good if the SEC and the CFTC got together, and the IRS. There's plenty of regulatory clarity. I wrote a piece in Morningstar about this. There's plenty. I interviewed Hester Pierce last week, kind of went through the risk alert together. There's plenty of regulatory clarity. The reason why there's no ETF is because they're worried about, again, the volatility in the markets and the market manipulation and all of that stuff. But as far as IAs go, and in regulatory clarity, to simply be conversant with clients, to advise clients, all of these things. And by the way, there's a lot of selling away going on. Probably not the best idea, but the regulatory clarity is as good as the SEC is going to get right now. And last weekend when I interviewed Hester Pierce, she said, we need to do a better job of updating some things, mainly being custody. The custody rules need to change. Also, that pricing part of billing, right? Of looking at billing and how advisors price and bill on these. But there's plenty of regulatory clarity. That's no longer an excuse because the SEC and FINRA has given you everything that you needed to be able to move forward. If not, you just don't want to do it. And that's okay, but there is regulatory clarity.
Right. So let's, if you're okay with it, let's move to questions. These were some that came in beforehand, and we also have plenty in our Q&A section. But let's see, we talked about the regulations one. We did talk about the fundamentals topic. As far as incorporating, I think you showed us various strategies, including the pick and axes, including as part of a sleeve, et cetera. And I think we hit on the upper right. I'm wondering if is there maybe in our Q&A section that we're getting from people right now. I'll pick one that's right in front of me, which is, Tyrone, is scarcity, and that's the 21 million Bitcoin ceiling, a big part of your belief in the price going up? Is the scarcity value of the number of coins that is finite, is that a factor?
For me, no, I don't care about that. I don't care about the price. I care about what the Bitcoin blockchain means for people who grew up like me. I don't care about the price. I'm being completely honest. Yes, it's nice if it goes up, but that's not my interest in Bitcoin. And the scarcity part of it, yes, I think that if you just know anything about supply and demand and all that, yeah, that should be why the price would increase at some point if you look at the halvings and all of that. But for me personally, I'm more concerned about what the Bitcoin blockchain does for 1+ billion people across the world who don't have access to financial services.
Tyrone, I want to hit on this question again because you touched on it, but I want to hammer it home. Michael Cohn asks, why should they hold crypto through their advisor? The advisor no more knows how to advise than the client knows how to value. Other than telling the client to diversify, what value does the advisor have?
Great question. And that is something that advisors are going to understand, where I'm trying to get our team to understand, to be honest, as you're building. Clients are going to have this away from advisors. It is going to be a world where that client is going to have that crypto away from you. They're going to want you to see it, but they're going to want your advice. There'll be a few that will want you to do whatever with it, rebalance or whatever, but that is a really good point. That is where this space is going. Everything is going to be decentralized. It's going to be away from the advisor. They won't have custody over the client's assets, right? So I think what happened now, yeah, clients aren't going to get much value from financial advisors. I'll be honest, there are probably close to 10 financial advisors that I know of, right? And speaking to all over the country, that I feel comfortable saying, all right, you can sit with clients and advise them on all of the world that is crypto. I think what advisors need to understand is this. This is just going to be that pocket, similar to real estate or whatever else, that is just, you need to have a trusted resource that you can go to, because if you're really going to get immersed in this world, you have to be in it all the time. And advisors have clients that will call them out. And these again, oldest millennials are 40. You got 12 years with this, right? But 29 is 12 years with it. And then the oldest of Gen Z, right? And that generation coming into this, they're going to know a lot more. They're going to be really savvy, and it is going to be held away from the advisor. And the truth is, a lot of financial advisors right now don't add value. That's just the truth, because a lot of different reasons, whether it's the regulatory uncertainty, the lack of education, whatever the case may be. And I'll end it here. When I took this role, Cheryl Penny, right? And we all know Cheryl Penny. Shout to Cheryl. Cheryl said, Tyrone, don't really care about all the crypto we do, but I know this, make them smart. Advisors want to be the hero to their clients. If you make advisors the hero, you'll win. But you got to educate them, because no advisor wants to look silly in front of their clients. And that's where we are.
I think that's such an important point, Tyrone, and that's one at YCharts that we're really focused on is it is not our personal recommendation that you should load up heavily on crypto assets, but you're not doing your job if you're not conversant, and you can't discuss the merits, and you can't discuss what having it as part of a sleeve of some sort might look like in a well-diversified portfolio. I feel like that's the minimum bar for an advisor, and you need to be educated and you need to be able to discuss the relative merits. 100%. Hey, I want to be sensitive to time and maybe just take one or two more questions. There's one I'm looking at that I don't know the answer to, which is, can U.S. investors buy the TSX Canadian Exchange listed ETH and BTC ETFs? So said again, there are some ETFs on the Canadian exchanges that focus on these assets. Are those available to U.S. investors? That
I don't know. That's a really good question.
I'll have to look that one up tonight. I do not know that one either.
Yeah.
Maybe we'll conclude on this one, because this is a step in the journey of education and moving forward. But a great question here from Jacob Ayers. What is a good resource to begin learning and educating ourselves on cryptocurrencies?
Crypto assets. This is going to be the intelligent investor of the crypto space, right? I'm not paid to promote the book or anything like that, but by Jack Tater and Chris Beniski, Crypto Assets, and shameless plug, Onramp Academy, right? Everything that we're doing in Onramp Academy is to educate advisors. It is every tool and resource you could want as an advisor to get educated on the space. We're going to have a full suite of primers, fact cards, like Morningstar type fact cards on all of the different crypto assets, research, white papers, you name it. We're going to have that as part of Onramp Academy. But every advisor watching this should have a copy of Crypto Assets in their office, right next to the intelligent investor. I know it's blasphemous, but it should be right next to that. That is a very good place to start for advisors, and start to understand, again, just the nuance of how this came about, how it came to be. And reach out about Onramp Academy.
Great. Hey, I want to draw things to a close, and first of all, thank everybody for participating. Sorry we weren't able to get to each and every one of the several handfuls of questions that we got. This is a step in the journey, and I hope, Tyrone, I'm so thankful on behalf of the industry, so thankful to you personally and the folks at Onramp for the journey you guys are taking us on to help us understand and help us make decisions and eventually help us potentially execute to the degree people want to make investments. I know I admire the hell out of you much more than the things you do in business. It's the things you do for society. And I know there's a big component of this that has a future state enablement of society, making us all more financially literate, making us all more able to transact and benefit from things going on in the market. So thank you for all you do. And any closing remarks on your end?
Yes. First of all, thank you to you, right, and the whole YCharts team. Remember, a couple of years ago or last year, whatever it was, like you guys just being very welcoming to me and saying, hey, showing me the Bitcoin chart and all that stuff. But you personally, I've been able to speak to the whole YCharts team, and you've been an advocate of me. You don't get into this seat without people who advocate for you behind closed doors. I will never forget that. So I'm grateful for that. The other thing is Bitcoin, Ether, all that stuff is cute, but it pisses me off that a child went to bed hungry last night. And the 141 people that are still on here, should piss them off too. And we should do something about it. Please go to nokidhungry.org and help feed a hungry child if you can. Incredibly grateful to you, sir. This has been awesome. Thank you for all you do for me. You inspire me as well. I'm grateful for your journey and the whole YCharts team. Appreciate you.
Love you, man. Thank you, everybody, for joining us.